A few fundamental factors we're looking at relative to the economy, stock market, financial and commodity markets. I'm Rich Boss for Critical Point, Friday, November 22nd, 10:40 a.m. Eastern Time. This is something that's flying around in some of the chat boxes and things like Twitter and others. Annual profit outlook, as you can see, going in here towards the November timeframe as we wrap the year, it's declined since September. Where we're getting concerned of the annual profits here for stocks and earnings per share. And yet the stock market has rallied off the enthusiasm of maybe what can go on with Trump as well as year-end seasonal factors, and that the economy is still hanging in there and companies are making money. But I look at this overall pattern saying, yes, it might be supporting of what we're looking for in this next 60 days here relative to our stock market forecast. This is something that's also flying around on the internet, and basically this is more long-term and has to do with also what's going on with Trump in coming years. But notice the federal government down at the bottom here, it has not really grown in terms of its workforce, okay? What has grown is the state government and then the local governments. Now that can have to do with population growth, but also since 1980, we've been in a mood to try to hold back the federal government, try to allow states to do more, and apparently even local. So now I'm a little concerned what Trump's going after, especially with Musk, Elon Musk, is it sounds like they just want to keep pounding on the federal government when I really don't see much here for federal government employees as a cost and an expense. Now, this means what they're really after is all the government programs and entitlements, and that's a bit scary because it is a justified, righteous entitlement of Social Security because we paid for it, we paid into it, it's ours. It's not the rich, it's not the Republicans, it's not the right-wingers, and it's not Trump's and Musk to cut and do away with. So we want to fight on that and be very careful of that. And from what I understand, a majority of Republican voters want Social Security, and they want abortion, and they want a few other things. Really, when you look at it, there's very little that they're on same page with, and yet the Republicans party is doing whatever it darn wants to, okay? But interesting setup here to something to consider moving forward here. In terms of government expenditures, because we can find evidence the real your tax dollars aren't paying necessarily for the government. The government's just printing the money, spending it, but that money goes into our economy to grow the economy and then can circle around where some of it may go into the tax side. I'm unsure of that. That's something that we're all studying here relative to modern monetary theory, MMT, okay? At any rate, we want to consider the fact that the federal debt is not high enough to cause economic problems, has never caused economic problems in the U.S. It's always been the private sector, that is business, consumers, people with their own debts. They're the ones, and the bankers. Bankers can create serious problems when it comes to debt, and Thomas Jefferson has made a comment about what he thought of bankers as they at times act like they're standing armies, meaning it can cause a problem for us. This one is something new for me and my modeling, even for my group of affiliates where we share ideas and tinker with things and double check one another. This is Economic Policy Uncertainty Index, and notice it exploded basically off of going into the election, getting Trump elected. Notice when it exploded that the last time it was this high, it was a recession, 2020. Before that was the recession with the financial Great Recession, the crisis, okay? That was a super cycle downturn where 2020 was just a normal once a decade sell signal recession relative to business cycles, okay? And so I don't know, granted we have 2 points here telling us to be worried, but that's not enough to be predictive. I don't think it is. I don't think it's calling for a recession now, but I won't rule it out as Trump unleashes his programs that maybe it causes a recession. It may cause a surge in inflation first and then a recession later. There's all kinds of crazy things, but it doesn't have to, or at least at this point looking at it. So I'm more interested in what occurs when it goes above, say, this level right here, And it does tell us we can at least get some setbacks in the stock market. We can have some problems and complications on a shorter term basis, investing wise and relative to the economy. And this is that same index, except where it's showing a shorter period of time, kind of zooming in some of the fluctuations. And I did find some of these spikes could create various short-term issues with the stock market, and various related after drops could move the stock market in the opposite direction. So stay tuned to what we're doing here in the next 60 days for some of our critical points here in the stock market, bond markets, various commodities, other financial markets here, and for the U.S. economy. Past results and not necessarily indicative future results. Have a great day. Get on board. Go to criticalpointpod.com or criticalpoint.podbean.com, where you'll find a direct link towards the free and locked up subscriber-based premium videos and audios. Get on board.